Crisis. 70% of millennials have less than $1,000 for a down payment on their home. You came here for the truth, so let me unveil that for you. Today, we are going to look at the situation of maximum accumulated debt. There is no possibility for young individuals today to purchase homes. Unless they are getting their money from alternate sources, they will be unable to afford it. I have gathered references from different countries to show you it's a global issue. Debt. Household debt is currently at a record high, or close to it, depending on where you live. Look at this. The US household debt hits new record high. And that's from May 2017. Moving over to Canada, household debt hits a fresh record with Canadians owing $2 trillion by the end of 2016. And then the UK, similar situation, household debt to reach a record high of 14,000 with the economy entering the danger zone. So each country has its own particular weaknesses, and they are exposed right here under this effect that debt has on people. Then we look at mortgages. Mortgage rates are at an all-time low, continuing to spur growth in the housing market. Surely prices of homes have increased, and this is continuing to put pressure on everyone who has yet to get into the market. Yorkshire Building Society launches record low 0.89% mortgage rate. This is, of course, out of the UK. Rent. Renting is another option, but rents have skyrocketed to extreme levels in many cities. There seems to be no stopping this inflationary pressure. This here is Orange County. Rent hit an all-time high amid job growth and low vacancy rates. Moving over to Ireland, you can see rents at a record high as rental supply reaches an all-time low. And then Toronto. Price to rent a Toronto apartment is up by 300 in the last 6 months. Staying at home. Millennials have been staying at home even after graduating because it's simply too expensive to go out on their own. The debt has accumulated throughout the college or university education, and the starting salary hasn't kept up with inflation. In fact, it is declining in real terms. Millennials may never get out of their parents' homes. And just to show you this, 1 in 3 Americans has $0 saved for retirement. It is just unbelievable to see this amount of debt, that it's not just on the nation, but on the personal level as well. Nearly 70% of young people ages 18 to 34 years old said they have saved less than $1,000 for a down payment. That's according to this survey. About 40% say they aren't saving anything on a monthly basis. Nothing at all. No savings at all. Well, this shows me, gives me extra proof that there is no legitimate way to dig ourselves out of this crisis. It is simply the crutch of the Federal Reserve being used to prop this system up. I mean, if you can just see this the way it is, where you have the S&P, the Dow Jones, all the other major markets out there being completely supported by quantitative easing primarily, and secondarily having the stimulus packages like TARP and all those. So it doesn't surprise me when you have $200 billion per month being printed and sent out there in a slush fund, a global slush fund, you have unintended consequences, or perhaps intended consequences. And that is, in this case, equity prices rising. It could be the housing bubble in Canada, for example. It could be commodities. You don't know, but quantitative easing has these effects where it's essentially unable to be controlled. They can control the amount of liquidity and basically put markets into a recession if they desire. However, just look at it. Where is the real economy? It's all gone. Anyway, if you found this video informative, please give me a thumbs up. Last but not least, if you found this video informative, then I know you will find my books, The Money GPS and Global Economic Collapse, even more informative. So head over to Amazon. They have a look inside feature that will allow you to flip through the pages of these books to see if you like them. Take care.